All right, what's going on, guys? My name is Nicholas Merton here at Data Dash, and today we're going to be talking about setting up a long-term cryptocurrency portfolio that will set up for success in the long term. If you're a beginner to cryptocurrency, guys, don't worry about it. We'll cover everything you really need to know to get the basics of it and to have a steady long-term portfolio. And also, for those of you who are experienced investors and want to try to find a way you can guarantee long-term returns in a safe manner in the cryptocurrency market, which is currently kind of volatile, this is the right place for you. It's pretty much for anyone who wants to get into the topic. And we're going to try to keep it as short and quick and to the point as possible so you can get on with your day, guys. So anyways, let's jump right into this. So first off, in building a proper portfolio, you need to have the right mindset. A lot of people go into cryptocurrencies with a sense of eagerness, a sense of greed, and really trading with emotions. Those are the three big points that I really want to talk about. In the sense of mistakes that people make. And before we go into the do's, I really want to focus on the don'ts. It's kind of the opposite about how it's kind of the opposite to how people traditionally teach you how to do things. They usually go with the do's and the don'ts. I want to start off with the don'ts because if you don't really engrave these in your mind and start spotting them from a mile away, you're gonna get burnt in the crypto market. Right now, things are relatively volatile. Things are new. Things are just becoming adopted in this market. So you really have to get these engraved in your mind. So before I cover the do's, I want to talk about the don'ts. First off, do not day trade. Don't day trade. Okay? Don't go watching charts by the 1 minute. Don't try putting all your life savings into one coin and trying to make a 30% return in one day. It's not going to work, guys. The whales, as they're referred to, the guys who are the big dogs, the movers, kind of like in traditional markets, how the hedge funds make all the big moves with the volume and stocks. It's the same way with cryptocurrencies, guys. You do not want to day trade on cryptocurrencies. And to give you a statistic, if you're really wondering about probability and why it's a good thing not to day trade, is that 90% of day traders in traditional markets like equities markets, mostly meaning stocks, ETFs, whatever it may be, they get burnt. They lose money. 90% lose more than they take in. Those 10% are usually the big dogs. They're extremely experienced. They come in with lots of education and practice in the field, and they've got a lot more money than you and I do, okay? So don't get caught in the day trading scheme, all right, guys? It's not built for the average investor. You have to think about it in the long term, which we'll cover a little bit in a minute. Second off, don't buy into the hype, okay? If you read an article somewhere that says, oh, you should invest in Ethereum, here's why, don't follow that. If you're on some kind of message board that's saying, oh, this is the next big coin, pump your money into this coin, you're going to retire and be a millionaire and have Lamborghinis everywhere. Don't fall for it, guys. It's not where you want to put your money. And putting all your eggs in one basket it's a simple failure that everyone falls into when they start trading, or at least the majority of people do. Do not fall into it and try to avoid it from the start. Third off, this is one of the biggest things you have to take when you are either trading over the course of a few weeks or months or investing in the long term. Do not let emotions take over your mindset on how you invest or trade. And the reason that is because so many people, whether they realize it or not, sometimes they'll be making decisions and they don't even understand why they're doing it in a critical and logical sense. A lot of people will just go ahead and do really crazy things because they let their emotions take over during the process of making decisions. And this could be, for example, chasing highs, bag holding for coins that obviously have had really bad news or have failures in their technology and not admitting it. You really just have to be strategic about it, guys. So anyways, now that we've gotten the don'ts out of the way, those are really big. And if you can get those engraved in your head, you're good for the long term. And now you're ready to focus on the do's, the things that are going to make you profitable, the things that are going to make you stable in the long term and really reap the benefit of the long trend growing in cryptocurrency. So first off, big point. Invest for the long term. Guys, you can do swing trading. You can buy some kind of smaller mid-tier altcoins, which I'm going to talk a little bit about later, and try to make some decent profits. And you can. It would be idiotic for me to deny that you can do that, and I'd be lying to you. However, I would say that the majority of money you are going to make, statistically speaking, is going to be looking in the long term of cryptocurrencies. Don't think of what you're going to be making in the next week or the next month or the next year. Think in the next 10 years. Think in the next 20 or 30. Guys, there is an immense amount of money to be made here if cryptocurrencies continue to be adopted around the world. It's just true. Now, I'm not telling you that that means you should just go pour all your money into Bitcoin, but I'm just saying that I think there's a lot of potential here. And I'm not the only one who believes that. There's been some pretty large investors who are getting into cryptocurrencies, and they're going to continue to do it over the next few years. So it's best to think in the long term. Second off, this is really important. Do your due diligence and conduct valid research. You do not want to jump into just any old coin. And this kind of goes off contrary to the buying into the hype. It's not just looking at a news article and going, oh, okay, I'm going to put all my money in this now. They said it's a good coin. No, research the technology. Make sure that the coins you invest in have a decent dev team behind them, meaning the people who are working on the technology and are working on the coin itself. And then also make sure that this is a coin that's viable to use in the long term. Is it really have any valuable use behind it, or is it just some coin that's getting created either through an ICO or going onto different exchanges and getting pumped, and then it's going to eventually be dumped on the market? You really got to make sure this thing is looking to be something that could be used in the long term. And 3. Contrary to thinking with emotions, I want you to think with rationality, think with logic. Approach things in a sense where you're not stressing out, you're not looking at the 1-minute chart, and you're looking at things much more on the daily, the weekly, and the monthly, and looking for trends. And this can really make you, not only put you ahead of the game, but it'll get you in a much more comfortable mindset, guys, where you won't be stressing about things. I can tell you, I've been there before when I started trading. I was thinking with emotions. I wasn't thinking with strategy. And it honestly physically hurts your mind. It really does. And you don't want to be caught in that, guys. So early on, think with rationale and really approach things in a sense of logic and reason rather than, oh my gosh, I'm going to miss out on the next big coin, or I need to buy Bitcoin now, or oh no, now I'm 80% down on my portfolio, things like that. All right, guys. So now the moment you all are really here for is, what really does make a solid portfolio. And a lot of people will tell you, oh, you should put this percentage in this and this percentage in that. No one has the perfect answer for it that's going to give you the optimal return. However, I'm here to tell you how to build a portfolio that will at least be relatively stable and actually, help you benefit and reap from the long-term benefit of cryptocurrencies, because that's why we're here. We're not looking for the short term, we're looking for the long term. And that's where the real money is. So basically speaking, you want to divide your money into 3 categories if you're going to invest in crypto. 25% should go into the large cap coins. And I'm going to cover, what these coins are, what these categories are made up of. You want to put 25% into large caps, 50% into mid cap altcoins, and 25% into small cap altcoins. So there's a variety of coins available on the market right now, and they come in a variety of valuations, different kind of stages in their development, and then also adoption. That's the biggest thing, is whether or not these coins are being adopted and utilized. So what do these coins look like, and what are their categories? How are their categories really defined? Well, if we go here to what really defines each category, we're going to first focus on the large caps. These are your stable long-term holds. These are usually made up of in my opinion, of the top 5 coins. So for example, Bitcoin, Ethereum, Ethereum Classic, Litecoin Dash, kind of like the really big coins that kind of make up the crypto market, or at least the majority of the valuation of the crypto market. They all usually have a market value of over $1 billion. That's a really good kind of stamp you need to put on there for your large caps. And over the time, you're going to have to increase that number as the crypto market grows. But you can usually correlate that number with the top 5 coins. It should be in the top 5 to 10, really depending on how valuations fluctuate. And then the big thing to look for is wide-scale use and adoption. For example, if you talk with anyone who has a general understanding of cryptocurrency, they know what Bitcoin is. They use it in a variety of stores. Ethereum is being used by a lot of different corporate sponsors. Their technology is being adopted on a wide scale. So look for signs like that if you're going to be investing in what I call large caps, and putting a lot of money into. So next up, we want to talk about mid-cap altcoins. What makes up a mid-cap altcoin? Well, I would definitely say that it has to be a coin in the top 30. This means that they have a relative level of popularity and media coverage, and you want to look for coins, at least in this ballpark right now, that are over 200 million. This means that there's at least a stable market to it, and anything above this level really can't be heavily manipulated by the whales, which are the big investors. So you don't have much to worry about. There's not gonna be much pumping and dumping. It's gonna be much more stable and based on whether or not the technology is getting adopted and if it actually really has the potential to move towards being a large cap. So yeah, mid caps are where you're going to want to put the majority of your money and really look for long-term returns in these and hoping that one or two of the coins that you're holding could be the next large cap. All right, guys, so next we're going to talk about small caps. Now, this is where the risk profile is getting a little bit higher. This is where you want to look for a coin that's in the top 100, and you want to look for a market cap valuation that is less than 200 million, of course. We're kind of going down from here. It has to be a relatively new concept, and there has to be some early adoption to it. So this is where your research skills have to really be plugged in. You really have to look at the coins and get through all the clutter and all the really crappy coins that are out there to pick some ones that really could have some long-term potential and might become a mid-cap, or if you really love the technology, might become a large cap. Either way, guys, you don't want to get too attached to a coin and really think with logic and reason here. The reason I say that is because even though small caps, there's hundreds of coins that would be considered as small caps, and you could go beyond past 100 coins, but you're gonna get burnt if you go below that. And the reason I say that is because at least around this ballpark in this time period, under 100 the top 100 coins, you're getting coins that have market caps of 16 to 17 million, or just barely double-digit millions. And that is putting yourself up for a pretty big risk profile to get affected by whales and pump and dumps and all kinds of different schemes and things like that. You really want to make sure that if you pick small caps in your portfolio that are making up a quarter of your portfolio and investment, that they're coins that you really do see going off in the long term and that are stable and aren't always fluctuating up and down, up and down, up and down. And they're starting to get maybe a little bit of media and press coverage around their concept and their dev team. So anyways, the examples I have listed here for the large, mid cap, and small caps are really good examples that fit into their categories. Bitcoin, Ethereum, and Dash are great large cap examples. Mid cap altcoins could be something like Stratus, or Ant Shares, or SIA, which are really great coins to start maybe looking into. And then also for the small caps, we've got Mysterium, Verge, and I can't remember the name right now. I know I downloaded the logo. I think it's like Cubic or something like that. But these are not coins I'm recommending personally. I'm just saying these are coins that fit into the categories that I'm defining. And if you want to look into their technologies, I recommend going ahead and looking into them. All right. So I'm going to actually move the title over a little bit here. I apologize for that. We want to talk about how to transition close profits. And this is very important towards building a stable long-term portfolio. And we're going to start off in the bottom here. And as you can see, we're starting off with we're talking about the categories of coins that we just covered a minute ago. So first off, you want to talk about how to deal with your profits from small cap altcoins. Let's say, for example, you picked Mysterium, and it moons off into the sky, becomes a really solid mid cap. It's getting some media coverage, and the valuation goes up past 200 million. Really good investment on your part. You guys made a lot of money off that. Here's what you should do. Put 50% back into other small caps that you've researched and have potential in, or ones that you've already been holding and haven't mooned yet, and put 50% into mid caps. Stable. It's a lot less of a risk profile, and a lot more towards the ability to actually make a return. Mid caps are a lot more stable in that sense. So you want to start pouring money into the more stable, trending currencies in the cryptocurrency market. And the same goes for mid caps. If you make a profit in mid caps, put 50% back into your mid cap portfolio and 50% back into the large cap. The whole goal here is to slowly start incrementing your money back into the large caps and really building a long-term stable portfolio for the winners that are going to be really adopted on a global scale. Now, for the large caps, if you make returns on them, here's what I say. I really don't think you should be closing your profits. If you're making decent returns off the large caps, hold them. Okay, don't sell your large caps. However, if you feel like, let's say for example, Bitcoin, it isn't meeting with the times. Let's say Ethereum, Dash, and a lot of other large cap coins start really taking over. IOTA might be a big one too, and they start really competing with Bitcoin, and Bitcoin loses its dominance, and you're thinking, I'm making a return with Bitcoin, but I don't know if it's the right coin to be in. Maybe diversify. Put some in other large caps, or pick a few large caps outside of Bitcoin. You don't need Bitcoin in your portfolio, but I would really recommend it. Yeah, it's just how you guys really want to approach it, but I think this is a really good strategic way to build a long-term portfolio and really start reaping the benefits of the long term. All right, guys, in summary, there's 3 main points I want you to take away from this. You need to think long-term, you need to start doing your own research, and stay disciplined. These are core values in making sure that you've got the right mindset on trading so you can approach to make good profits in the long term. You want to make sure to build a portfolio to last, circulating profits to the top. This is kind of like what we covered just a minute ago about how the structure is in thinking long-term and putting money towards a much safer route rather than just gambling it on a ton of small cap coins. And also, guys, this is the most, I'd say, I know I've been saying a lot of things are important. This is really the thing you should take home, okay? If you are going to do trading, if you are going to do investing, however you approach it, guys, approach it with a sense of logic. Do not jump into things irrationally, and really approach things in a smart approach, all right, guys? So anyways, that's pretty much it, guys. I really appreciate you sticking around with me. I want to say thank you for watching. If you guys like the content, please give it a thumbs up. Possibly think about subscribing to the channel. We've got lots of great content on cryptocurrencies, data analytics, and market trends overall. So there's much more to come. So guys, thank you for watching. I'll see you guys in the next video. And if you have any questions or comments, please leave them below and I'll try to answer them. Thanks so much for watching, guys, and I'll see you in the next video.